All right. All right. All right, guys. Hola, ¿qué pasó? What's going on? This is Hala Pablo. Thank you for tuning in. Yeah, hate to say I told you so, but told you so. All right. So, yeah, we've witnessed something that we knew was coming. We didn't know the exact route of getting here, but we knew that the destination of where we are now was inevitable, that we weren't going to 200,000. We weren't even going to 120, like so many were pontificating. No, we're going down. Why? Because of the volume spread analysis and the schematics and the top patterns playing out and the news and all the bullish stuff with the government and Trump and all that. It was all just a perfect recipe for a for a sell-off. It's not really massive, but it's a sell-off. It's not a pump, it's a dump. And we knew it was coming. If you've been following this channel, you should have been prepared. So I want to elaborate a little bit more now and let you know where I think we are and where we're going still. We have these two charts playing out. Now, this is subcycle B in 2021. This is subcycle A, subcycle B. These are both tops of macro bear cycles. You see, after the subcycle A, we came down. This is the 618 retracement level here. We had an accumulation, and then it put up another shoulder. This is actually an inverted head and shoulders, and so on a macro, and so it put up the other wall, and we had a new all-time high. I think we're going to do the same thing, sort of similar, this time around. It's just the tops are reversed. So after subcycle A, we had the distribution, the accumulation, reaccumulation, distribution, and for us, I think the top that we're in right now resembles subcycle B as far as the waves and the VWAP and everything, and the VSA. Everything is looking like subcycle B, so it's reversed. And I don't think we're going to retrace as far down as subcycle B retraced. I'm going to play these bars in a minute to show you what happened after subcycle B. But I do think we're going to retrace more. And when we fall low enough, and I contend 618 Fibonacci retracement is probably pretty safe to assume that puts us around 80 Gs, somewhere in the, it's not to say we can't wick down into the 70s, but I think we may taste the 80s, 80, between 89 and 85, 84. We may wick down to 80. That's the 1618 retracement from this double top here that looks like it's playing out. So don't be surprised if we go down there. But I think, kind of like we saw here in 2021, we're going to have a proper reaccumulation zone, and I think it's down in this area here, this accumulation zone, which will be around the 80s, around this area here. We should see the resumption of the altcoins at some point. I'm hoping. I mean, I don't know. I don't know these things 100%, but gee, I'm certainly hoping, and as I know you are, we'd really like to see these alts fly. And as it turns out, we're on the right path right now. So these two charts, you see the similarities. Again, subcycle B 2021, and this is our current. You see it's played out. We had the 3 drive and the expanding wedge. The all-time highs have been mitigated. Once we fell through, see where this white circle is, that's where we broke through the macro trend support, flipped it to resistance, and we had several attempts to get back into the ascending channel, which ultimately produced failures to rally, and we were rebuffed or rejected off it, and in doing so, riding it up, creating another trend, which in both cases looked to be almost like expanding triangles, bearish triangles. As we see here, we have the rising highs along the micro trend support. Well, now it's micro trend resistance. It's a very, very strong resistance, and you see it wasn't able to prevail after 1, 2, 3 in 2021, and then for us 1, 2, 3, and then we had multiple attempts just now. That was with all that crabbing, all that boring stuff that we saw last week. That was attempts trying to prevail. That's the bulls trying to bust through this micro trend resistance line, and they weren't able, but they did manage to create another all-time high, went a little bit above it. We actually exceeded this one in the same range and created, in fact, as it turned out, what's looking like a double top. Okay, and then we had a prompt rejection, like we rejected here in 2021, came back down into the trading range. Now the VWAP I anchored in both cases to the preliminary supply zone at the beginning, at the end of this three wave here on this three wave Elliott, where we have the 4 and then the 5, which created this 3 drive that we see on both of these patterns, and then we had the ABCs. So yeah, the anchored VWAP has been anchored to that same area where the preliminary supply began to come in and put the brakes on the pump. This was the Trump pump that we had back in November. And so it's been weighing out the average volume throughout this entire distribution range, just like here. And as you see, after we've had this rejection kind of like in the same area, we even had this wick up here, same kind of deal this year as well, and came down and created its own kind of distribution top on the micro, as you can see under here, and then we fell back into the range on both, right at the area now where we are intersecting the VWAP. Now, the anchored VWAP serves as a really, really good kind of mid-range point because, again, it's the average, so it's going to be the volume-weighted average price between the highs and the lows of this range. And so, as it turns out, as the range plays out laterally, it provides it shows itself as a pretty good 0.5 Fibonacci level, which is mid-range, what I call TRM, trading range midpoint, on both. You see, and so we kind of touched it. Well, we fell through here as you can see. We'll play the bars now for 2021. You see, we fell through, and once we fell through, we weren't able to get back up over it, even though there were several attempts. In fact, we fell through trading range support even. And I'm kind of anticipating this as well, just not as this one kept on retracing. As you know, this was the last top that they saw, and that we saw in 2021, and all these series of LPSYs, last points of supply, as it marked down, going all the way down to 16,000. Yeah, this thing just kept going and going and going, right? You remember that? Well, I don't think we're going to go that low, obviously, this time. I think we're going to go like we had here, down to this area, to the 618 Fibonacci retracement, the golden Fibonacci retracement level. I could see us doing that. So, but what we want to look for, what's going to clue us in, is if we cross this anchored VWAP point like we did here in 2021. This is what I'm focusing on now. I'm not trading alts. I'm not swing trading anything because I want to see what Bitcoin's going to do. I want to see if it's going to play its hand here. I want to see if we're going through the anchored VWAP. If we go through the anchored VWAP, this is like what we call falling. It's like falling through the ice in Wyckoff terms. And falling through the ice is a big deal, especially if we have a distributional bias, which it appears, which I have had since the second week of December, since everything began selling off right here. And then we came back up, and then we couldn't get back up into the channel here, and we started getting rejections. I've been bearish ever since, and I've taken heat from some people because of that. And now more than ever, I'm bearish. We haven't been able to get back into this, so we're going back down. Now, if we fall through this ice, now so far in this ABC, I contend we're in the B wave right now of this ABC correction off this 5 rejection that we had, which kind of resembled like a diamond, which we just came out of. Now, this is on the 12-hour, but if I bring it down to the forensic, maybe a 30-minute, you'll see the diamond pattern in it. In fact, I could do that now to show you. I don't want this video to go on too long. I'm trying to truncate these videos, make them shorter, to keep everyone's attention. But this area here, you see this diamond Yeah, this diamonds are very ambiguous. They can go either way, but really it's psychological warfare here because we have what look like distribution with the expanding waves, like market makers selling off into the highs. But then towards the mid and latter half of the range, the price started contracting again. So you have like a diamond kind of shape, right? And that's just to foster confusion in traders, make you unsure whether to go short or long. But we knew from the amount of supply coming in at this micro trend area that it was probably most likely going to be a distribution, and so it was. We had a good sell off, and this is the A, and then the B coming back up. The B came up to about the 382 Fibonacci retracement off the A, and that's typical for a B wave. And now it looks like we're heading back down with the C, and the C should take us. The C wave, I was teaching my group this morning. The C waves are about the same length as the A waves. That's how you measure these corrections with the Fibonacci. It's either 100 and it can go up to 127, but it's normally about the same length as the C, as the A. Just maybe it just goes a little deeper. And these are zigzags, meaning it's a 5, a 3, and a 5. So if you break these down, you can see the subwaves within the A and the C, and the B is a 3. So the B in itself is an ABC, and you can kind of see it here, A, B, C, and then this is a 5, the 1, the 2, the 3, the 4, the 5, and then the ABC up, A, B, C, and now what's looking like it's starting to play out with another 5 down, 1, 2, 3, 4, 5, and that 5 should theoretically take us through the anchored VWAP, and we could fall through the ice somewhere on maybe the 3 wave is going to take us down through it, kind of like it did here. And if that happens, then we're on our way, guys. Just like strap on, get ready to go scuba diving, because we're going to touch we will touch the trading range support line here, kind of like it did here. Now we've had several touchdowns already. 1, 2, 3, these 2 like double bottoms here. This one was a triple bottom, and then we had a double bottom after this rejection. And now if we touch it again, we come down and we maybe do another double. I don't even think it's going to do a double. I think it'll just take one time on this already. And because you see the predominance of supply in the VSA, that could be the straw that breaks the camel's back, and that could take us down into the 618 retracement area of the Fibonacci ratios, kind of like what it did here. Like if you do a fib off, say, this automatic rally point in the high, it puts this area, see, this is going off 2021 to see where it consolidated right in here. Of course, it went down lower. I don't think we're going to do that this year. I mean, we might go down lower to the 70s, but anyway, this whole consolidation, which in 2021 was a redistribution, took place between the 618 and the 2 area. Now for us, I believe it takes us down to about 80 grand. We can kind of see a consolidation range around that level. So if we go off the here to here, 618, I'm sorry. Let's first of all, let's bring this back up to the 12-hour, because it's just going to get sloppy if you leave it on a low time frame. Let's go to a 12-hour. Let's go to a higher time frame, back out to where we were when we started this video, and draw the fibs from it. And we'll go off kind of like what we did in 2021. We'll go off this like automatic rally point here, and go to the swing high, and it should kind of, okay, so it's like 85 Gs, between 80 and 85 Gs. We'll go up this one here because this is a little lower, and then 84, good, getting closer. These are off the lows of the wicks that go below the support line of this trading range, and as you can see, it takes us down into this area. The 84,000, between 84,000 and the 2 is 80 grand. So the 2 here was 48.7. So we could see if we go through the ice, is all I'm saying. If we go through the ice and we keep on this and FUD kicks in and we start having panic sales from retail, that could bring us down. Now I know the FOMC is due to make an announcement on the 29th, I believe, and so I don't think that's going to help. I mean, even if it's positive, you know, I think with already how it's been playing out and like the just the liquidity coming out of risk assets right now, I think it's just that'll be used as a catalyst to attract longs that will be trapped, that will be trapped out. It'll be kind of like a rug pull, if you will, for longs to jump into Bitcoin if it happens, and we may go up for a bit, get trapped, and then down. I think inevitably we're going down to the 84 to 80 area, and then consolidate here, kind of like what we did in this area. Whereas this kept going, you know. If you look, this, I mean, if you let it play out, this, I mean, I don't have to let it play out, but you know, I mean, this was like, this just went down to Hades, you know. Like I said, I think we'll go back down to here, and then up from there. I think altcoins will have their day when that happens, and then we'll be fixing at that point. Bitcoin will regain dominance and start marking back up, put up another all-time high, and then from there I think we can go to like 120, 130. But that won't be till later on this year, maybe in the summer, late spring. So, but I see more blood in the forecast for now. So that's all I got. If you like this kind of technical analysis, give me a like, a subscription. That way you won't miss any more. You know, stay safe in the market. Like if you haven't been following these videos, you know, you could have been safe. Hopefully you weren't one of those that got liquidated with longs, thinking that we were going to mark up from that diamond shape. Hopefully you've been watching this, you know, these series, and you stay safe. And if you haven't, then that's a good reason to subscribe, right? And stay safe in the markets. And for those interested to take your trading up another level in your chart reading analysis, we do have a Discord group, a trading group, private Discord group. It's through Patreon. If you choose to check it out, just be advised that I'm not in Patreon. Like when you get into Patreon is just where you sign up. So, and then you have to register on Discord after that. If you stay in the Patreon, nothing happens there. I don't do any charts. You have to go into Discord through Patreon. So, Patreon is just a doorway. So just keep that in mind. Don't sign up in Patreon and be like, where's all the updates? Everything is in the chat, Discord. That's the private trading. That's where I keep all my charts, all my tutorials, and all my Bitcoin updates, and also my hot trades. When I'm ready to jump into the market, I start looking at altcoins. I put everything on there as far as what I'm looking at, what I'm DCAing in, my preliminaries, when I'm getting in, when I'm going out. And there's more in-depth analysis. And also I could answer personal questions, kind of look at some of the coins that you're interested in when I have time. And it's just a really cool resource. It's a nice little community of traders, and they're all like-minded. We love price action volume. I teach Wyckoff, I teach Elliott Wave, I teach volume spread analysis, all that good stuff. And so, and I show you how I combine it all together, which helps me in my style. You know, this is my style that works for me, and I've been incredibly successful at it, and I don't mind sharing it. And you know, and I don't have a course to sell or anything like that. So it's just a fun group to be in. It's laid back. Absolute beginners are welcome, and I'll teach you how to read charts like smart money without indicators and all kinds of stuff cluttering it up. So if that's something you're interested in, check out our group. I keep it extremely affordable. All right, guys, that's all I got. I'm going to let you guys go. None of what I've said in this video is financial advice. I don't have a crystal ball. Do your own research. But please be safe in the markets, and hopefully I'll see you soon. Like, subscribe. All right, guys. Adios. Have a good day. Bye-bye.